Video here, and I just wanted to go over how to find smart money setups and a quick little strategy here on how you would actually identify smart money. So the first thing I'm going to do is remove the drawing panel, and the first thing I'm going to do is I'm on a daily chart right now, zoomed all the way out, and as you can see, we have overall a descending market structure, bearish structure, right? And what I noticed is, this is why I like to use higher time frames. When I went on the 1 hour time frame, I identified this liquidity zone, this liquidity, before I checked the daily. So on the 1 hour, it looks like we're bullish, right? Because we have higher highs, higher lows, and higher highs. But what made me think that there may be a potential trend change is the fact that there's liquidity here, and if I'm wrong, and let's say the market keeps going up, that's perfectly fine too, because I'm actually not going to be entering any sell trades until this black line is broken. And this black line has some support that I'm pretty sure some retailers are planning on buying off of because of, So if you're looking on the daily chart, I noticed that because of our descending structure here on the daily chart, we might potentially, let's zoom in guys, we might potentially break below that black line you see on the screen all the way to here, to this gap, right? This little gap. And what I mean by the gap is, I know most people will mark this as the gap, and that's fine too, but when you're a beginner, the actual gap is the gap between these wicks that haven't been filled. So we see how that wick on top, and I'm drawing the box aligned to the wicks. And if you don't know what I'm talking about, I will actually point it out here. So you see how that wick there, the box is aligning with that wick up there. This space in between would be your gap, okay? And this doesn't mean necessarily that the market will go to this gap, but the fact that I have liquidity here, which is on my black line, and the fact that I have higher time frame bearish structure that's against the 1 hour time frame gives me some sort of, I'm getting a feeling that we may potentially be declining here. And if I'm wrong, that's fine too, but what I'm going to do, guys, is I'm going to set an alert on that, I'm going to set an alert on that line, so if it does break, I could potentially find other gaps in supply and demand zones. Supply zones that I can sell off of, or distribution if you trade Wyckoff. But yeah, guys, so the first step to finding smart money trades is identifying liquidity, and of course getting good at market structure too, because for market structure, what I use, the time frames I use the 15-minute and up. So the 15-minute, a 30-minute, and the 1 hour time frame is usually the time frames I'll check for my market structure, and I hope that helps you guys. And then for liquidity, I look at liquidity on all time frames, but liquidity is usually a confirmation of smart money. So if you're looking to if you don't know if the market's going up or down, just start identifying liquidity zones and complement those liquidity zones like here with your market structure, okay? So you can complement it with your market structure. So if we had, let's say, descending structure, which we do on the daily chart, oh, what the fuck just happened? I think it went to my other pair. If we had a, hold on guys, I'm sorry. I just have to go back here. If we had descending structure, on the chart here, I'm not gonna lie to you guys, I literally forgot the pair. Here it is. There it is. It's odd CAD. So this gap here, and that basically is my confluence. So you always want to check the daily time frame and zoom all the way out, or zoom all the way in to see what's currently going on. I do both, and then I go to lower time frames. So that's another reason why the higher time frames are important. But yeah, guys, when you're starting out, just practice your market structure on those time frames that I gave you, the 15-minute, 30-minute, 1 hour, even 2 hour maybe, but I usually like to stay between those, the 15-minute, 30-minute, and 1 hour. And then what you'll do is identify at least 4 pieces of market structure. So if you're looking at a bullish trend, you see, like, for example, USD CAD going like this, you would identify your low here, then you would identify your high, then your lower high. I know that's sloppy. Your lower high, and then your higher high. So we have total 1, 2, and yes, I'm going to talk to you guys like you're 5 because that's the only way people learn, and that's the way it's just easy for humans to learn that way. 1, 2, 3, 4. We have 4 pieces of market structure ascending, and if we were going bearish, we would look for on the 15-minute, 30-minute, and 1 hour, we would look for in bearish structure. Sorry guys, I'm trying to erase this stupid shit. We would look for the market going downwards, of course, and we're only going to pay attention to the most previous highs. I know sometimes we can have more higher, lower highs and lower lows, but what you're going to do is when you're marking your structure, never look all the way back here. Like never look all the way back here. What I want you guys to do when you're starting to do your structure is start from the right to left. So the current price would be, in this example, would be right here, right guys? So currently you would mark up your low there, then your previous high, then your previous low, because this is what it's actually doing now. You wouldn't go all the way back here and look at the past. So if I saw the market doing this, and I'm on, let's say this is the 15-minute time frame, or the 1 hour, or the 30-minute, then that's my structure. That's how I go by structure. I look for 2 lower highs and 2 lower lows when I'm looking to sell. And the same thing looking to buy. 2 higher highs and 2 higher lows. And yeah, guys, that's pretty much it. And how you know the lows and highs are valid is the fact that it's either breaking the structure or it's the result of broken structure. So, for example, the first high, the first low here was a result of this previous high, right? And this previous high is a correction, the result of the low, and ultimately a result of this, because this is actually what started the most of it. Because when we had this structure here, right here, all this unhealthy price action, that typically would be our trading range. That would be our range. It leaves a range. It does, because usually the markets will go up, down, correction, down, but sometimes smart money will just go straight down like that, and then there's all these areas of imbalance zones and areas to enter trades. And usually the market will only move that drastically if you have high impact news and medium impact news. That's why I have only the orange and red folder showing. Okay, and yeah, guys, basically identify market structure the way I just talked about, and also once you identify your market structure, then you would look for what's called, I like to call my points of interest. So my points of interest would be order blocks, fair value gaps, imbalance gaps, or Wyckoff schematics. But I'm not going to go into that because I don't want to confuse you guys. But just focus on order blocks and fair value gaps. Those would be your supply and demand zones. Order blocks and fair value gaps. And I will be making some more videos on that. But yeah, guys, market structure is always first. Write that down. Number 1 is market structure. Number 2, I want you guys to look for liquidity. So let's say I'm going to show you guys right now. We're going to do it right now. So let's say on this time frame, okay, so what do we see here? We see structure, right? That's going downwards. It's descending. So we have a low, previous high, previous lower high, and a previous higher high. Technically, that's not higher, but we'll still count that as, because it's ultimately going down because we had another high before that. That proves right here in this low, that proves that we're still in structure, right? So now that we know we're in a descending structure on the higher time frame, or not, let's forget about the time frame. Now that we know the structure is descending, the next thing I'm going to do is like, okay, so how am I going to make money and how am I going to enter a trade? Okay, so you have your structure. The next thing I want you guys to do is identify potential areas that have liquidity. So like we said before, I see some liquidity right here that looks like it's a potential support zone for retail traders that I'm going to take profit off of, because that's what my take profits are, always support and resistance zones, or liquidity, double bottoms, double tops. That's what I use for my take profit. I never enter off of them. And so this little thing is a confirmation. So if it's ascending on the high, on that time frame, if my structure is going downwards, I'm going to be hoping and looking and waiting and setting an alert on my trading view for this black line here. So when price goes down and it actually will break this structure, that will create a new price range, because that will be the lower price would be 0.88047, and the high of this price would be back here, 89,509. And so if I'm selling, I obviously want to sell at a higher price. So instead of the market waiting for selling down here, I'm going to be patient and wait for the retailers to like buy up in those tiny candles like this, right? The tiny little movement, right? And then I'm waiting for that tiny little movement to come to a potential POI, like I said to you guys a couple minutes ago. My POIs are all it is just my points of interest that I'm interested in taking trades in, POI. And then those POIs are your order blocks and then your fair value gaps, okay? And so let's say there was a gap here, a fair value gap on the top of the range here that I'm waiting for it to go to take my sell trade after it broke the liquidity line. So all I'm doing is waiting for this to go all the way up to my zone here, and I can choose between two choices. I can either enter right away here, or I can wait for a break of structure to break the previous structure and then enter. And there's no right or wrong way. You can do either one. They both work. But if you're more experienced, I would just recommend entering right off that gray box instead of waiting for break of structure. But if you're a beginner and you're not so confident, you can just wait for it to break structure like that and then enter off of here. And another confirmation, guys, is when you're trading smart money and you have your supply and demand zones, fair value gap zones, order blocks, a good confirmation is them leaving a wick off your zone. So say this gray box that I'm drawing is your zone, right? You would want there to be a, let's say this other gray box is the candlestick. Instead of the candle body actually touching your fair value gap, order block, supply and demand zone, or your entry, a good smart money tip for you guys would be to see the actual wick touch it. Because I've noticed in trading, in my experience, the more wicks that you have that touch your zones, that's confirmation of smart money. Because what does smart money do, guys? Smart money just taps and goes. It doesn't. That's why people don't believe that we have low drawdown in our stop loss and we have minimal drawdown. And drawdown simply means just like in your stop loss area. So like, you know how people will trade and then, you know, let's say you have a trade going upwards, right? And you have your risk to reward tool here for your take profit and then your stop loss, right? So a good smart money trade, all smart money would do is come down to your entry, tap it, and go immediately, right? Those are good smart money trades. That's how you know smart money is actually in the market. What you don't want to see is the market coming down really boldly and then just kind of like hanging in your stop loss. And I'm not saying that this can't still be in profit, but typically all my winning trades don't just hang around in the stop loss and then go up. They just tap my entry and then go. Because you're entering off of exact levels that smart money is actually tapping into. Because that's the whole point. And then let's just clarify, smart money in Forex trading is simply the big banks and the institutions. So the hedge funds and banks, like they make monetary policy, like interest rates and things like that. But we don't have to get into all that today. All you need to know is smart money in the Forex market are the banks and institutions, and then the news moves the market. So economic health data like GDP, unemployment rates moves the market, and then monetary policy, like bigger things that have to do with, you know, that have bigger control over economy, like the interest rates. That's has a larger effect than unemployment rates. And so just always know that. And then when the banks and institutions are in the market, they typically will just tap on exact levels and then go immediately. Their trades are big. So if I was selling on that gray zone you see on my screen, my entry would be at that gray box. And then you see how my candlesticks just tap into my zone here, and my stop loss can be above here. You see how my candlesticks just tap in, and then boom. And I'm not saying all the time it's just going to go straight down, because sometimes it'll go straight, and then blah, blah, and then blah, 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 and then boom. Okay? But yeah, this was just a little quick video on explaining on just, I just want to give some tips out for people that are trading. So number one is identify your market structure. And if you want to know the tip for finding a good trade, go on Forex Factory and look up upcoming news, like for the US dollar. Okay, so if there's upcoming news for the US dollar, I'm going to look for pairs that have the US dollar currency in it. And so I would trade pairs like AUD USD, US blah, 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 and then look for trade setups. So in order to look for trade setups based off the news, you need to know how to identify market structure. Because market structure essentially is how the market moves. Only the people that control the market move the market through market structure, not retail. And maybe, yes, retail on a small time frame, but ultimately they can't control market structure because they don't have enough capital and volume to do that. And so always use market structure on your 15, 30 minute, and 1 hour and start testing that out. And then if your market structure aligns with the news, what you'll notice is if you have, let's say, a point of interest, like I just discussed, POI means point of interest, areas that you're interested in taking trades off. And in those areas contain order blocks, fair value gaps, and trades and entry points. And so once it comes to your area based off the news, it should just tap and go, because the news should be, you should either be entering your trade before the news actually happens or after the news. Because let's say all these gray candles, let's say it tapped into my gray box, right? And all these gray candles right here on the right, look on the right side, all these gray candles just tap in, and then the news causes it to dramatically go down like this, right? But one thing I've always noticed is that even if you miss the news and the market moves like that, you don't need to have fear of missing out, because guess what? There's always a correction. So there's the market will come down and the market will go back up like this before continuing to go down. The market just never goes straight down, and that's not possible. So you never have to have fear of missing out. And that's what people that don't trade don't understand. So like when they see Bitcoin or some stock that's like, for example, like this orange line, they see some stock that's high, right? And then they're like, oh, it's going up, let me buy at the top, because they're having FOMC, fear of missing out, and they buy right here. And what tends to happen is after they enter, their the market will come back down and they'll lose money thinking it's a scam or it sucks. And then what will happen is the trade will go in their favor, but not until there's a correction. And sometimes there's not perfect corrections like I'm drawing. Sometimes it goes up a little bit, up, down, up, and sometimes it does that. But never have fear of missing out and enter at the bottom or the top. Always wait for a correction. Always wait for them to buy back up and then go down. But yeah, guys, this was just a little mini course, and I'm going to be making more videos like this, but I hope you guys got some value. I understand the way I talk sometimes can make it hard to understand, but if you have any questions, just message me, okay? All right, peace out. I hope you guys have a good week. It's Tuesday. Remember what I said. Number one, go on Forex Factory. I know I said structure, but actually, number one, you should actually be checking the news that's coming out for the week, because if the news moves the market and smart money's the news, then you need to be trading based on this. So this week, January, we have the odd news, US dollar news, and USD and GBP news. And so the only pairs I'm trading are going to be those currencies, or pairs with those currencies, like Euro GBP, odd USD, blah, blah, blah. Okay? And so, yeah, guys, just first, do that. And once you identify the news and the pairs you're trading, you want to look for market structure on the 15-minute, the 30-minute, and the 1 hour. And once you identify your market structure, you then want to go back on your chart, and you want to actually you want to go back on the chart, and then you want to identify points of interest, POI. Write that down. Point of interest, POI, areas that you're interested in taking trades in. Okay? And that's your bias. And your bias is, even though we can't guess the market, we don't know everything, we can have an educated bias based off all of these factors. Okay? So I hope you guys found value out of this. Peace out, guys. If you have any questions, message me. I will help you guys with your trading journey. I'm still on the journey too. We're all on it. You know, no one knows everything. I lose trades too, guys. Look, I literally lost a trade this morning. And it's not a big deal. I don't win all my trades. Look, I'm going to show you here. I'm going to show you guys right now. So you see that gray box there, that smaller one, not the risk to reward tool, but that alert there I had. That was a trade that I was taking because I saw this wick tap into that. And then I thought it was going to enter off there, but I got stopped out here, okay, before it going up. And that's fine. You know, a lot of people are afraid to show their loss and stuff, but guess what? No matter how good you are in trading or how much you study, you will lose trades sometimes. And that doesn't necessarily mean that you're a bad trader. It can just mean that that wasn't the right trade at the time, or you maybe missed something. Because I miss things all the time. But the more you keep trading and the more you do it, and the more and the longer you do it, you'll notice that your win rate will go up, and you'll be able to identify the mistakes you could have made here. Like today, I'm probably going to take time and journal, why did I lose this trade here? Okay? And sometimes it may not even be your fault. It may just be the market doing something else, right? And you have a perfect setup and it makes sense and it just does it because it's the market. You know, we don't know what it's going to do. So don't get mad if you lose a trade, and don't be upset, because I lose trades too, and I've been trading since 2018. And I still lose trades. I literally been, yeah. So it's just like, Don't worry about it, guys. And my Instagram is at Dynasty Wolves. I'll write here at Dynasty _ Wolves. That's my Instagram. Sorry, that's not my Instagram. Don't write that down. Dynasty _ Wolves. That's my Instagram. Okay? And I know that shit's hard to see. I know I'm gonna make it fucking bigger. Hold on, I'm sorry. Sorry for cursing too if you guys don't like that. But Dynasty _ Wolves. Write that on your Instagram or TikTok or whatever, and message me and show me your charts too. Like show me screenshots of what your stuff and ask me questions. I'm not gonna gatekeep a lot of information. I'm not gonna give my full detailed in-depth strategy, obviously, but I will help you a lot. I don't have any courses. I don't have any. I have like an ebook, and then I have a Discord server with people in it, and then I have like my private videos in there that show my strategy. But I don't charge you $400, $1,000, even $100. It's literally $49 to get in one time, not membership, not monthly, one time. And then you get access to all this and how to find concepts consistently. Because a lot of people don't win trades because we're so focused on the profit and the blue thing in our MetaTrader or our broker. We're so focused on that we don't connect with the market and learn how to trade, because all the profits are, it's a byproduct of you knowing how to identify consistent setups in the market. And when you develop that skill, the profit will come after. So my greatest tip is to just focus on the charts and less on the profit, and get used to seeing your same setup play out over and over again, and then just practice with your setup. Because ultimately, when you get good at identifying the same setup, blah blah, and you focus on the charts, then when you take trades, then you'll make all the profit, and then you won't be even focusing on it. But yeah, guys, it's just a little bit of tips. There's nothing special here. This is just a little mini course. It's not a full course. It's just a little mini course with a little bit of tips. But if you guys want any help or anything, just message me on Instagram. It's right here on the screen. I hope you guys got value. And I'm actually looking at Bitcoin too right now. I'm on the. I trade both crypto and Forex. So if you're interested in any of that, let me know too. Because I just like, I'm a big fucking nerd, so I do a lot of weird stuff. But yeah, guys. Yeah, just message me. I hope you guys have had a great day today. I hope you guys are learning. Don't be afraid of losing trades. Okay, there's nothing wrong with you. You're not dumb. You know, you're going to get it. Okay, don't give up. Do not give up. Because the moment you give up, all that time you spent giving up, you could have been improving. You know, I lost a lot of money, and I thought, you know, the trading was bad, and there was just something wrong with me. But I kept going, and then I experienced a level of success that's comfortable with me. You know? So yeah, guys, that's all I'm going to say. Peace out.